Ladies and gentlemen, moving forward to our first power panel of the day, which will be discussing leveraging opportunities in finance. I'd like to welcome our panelist to join us on the dais, Mr. B. Ganesh Kumar, CEO and founder, Kuwait Technology Services Private Limited, Mr. Mahavir Agarwal, Head Credit Risk Retail and SME, Yes Bank, Mr. Eric Was, President Urbanite Business Bajaj Auto Limited, Mr. Ajay Raghuvanshi, Head Sales India Region, Skoda Auto India Private Limited, Mr. Vikas Pandey, Executive Vice President HDFC Bank, Mr. Sai Giridhar, Treasurer FADA, who will be moderating the session, to join us on the dais, please. Can we have a big round of applause for all our esteemed panelists? Thank you so much for joining us.
Hello.
Yeah. A very warm welcome, gentlemen. And Mr. Girdhar, I'll leave the dais to you.
Can I just make a request? Can I request people who are standing outside, dealer friends who are standing outside, can we request them to come inside, please?
Definitely. Can we have volunteers moving forward? They'll do so, sir.
We wait for a couple of minutes. Good evening, friends. Had a lovely opening keynote session. Probably as a dealer, तो मैं थोड़ा सा डर रहा हूँ with this keynote session that whether we should be in this auto industry or not. the kind of fear factor which was created by the eminent guest probably. I don't think the industry would probably be going that way, but we have a packed panel for the discussion on finance. As probably one key takeaway, what Mr. Ramesh Iyer said, that we probably as dealers, we know the finance as back of our hands. And I guess most of us will agree, but I beg to disagree in that way, because in our particular industry, we end up eating our stock, piling dead inventory, losing money in course, and then blaming it to manufacturers and financiers that the rate of interest is going up, OEMs that the margins are less. So probably today we'll, in next 45 to 1 hour, we'll try to decode the puzzle behind the financial prudence what is required. And as Rajan was said, that we probably, the dealer community and the bankers, the OEMs, we should probably be working on financial prudence. I'll start with Mahavir ji. Mahavir ji is from Yes Bank only, and as Rajan said that we should be working on financial prudence. Sir, if you could probably enlighten us that as a dealer how we should work on that, so that, because see, in times to come, we would be requiring more funds. The expansion mode is there, the industry is going up. So if you could just enlighten us, because you head credit from Yes Bank's perspective, and finance is an integral part. So please, sir.
Hello. Yeah, thank you, Mr. Sai, and good evening to all. So, during the inaugural session, Mr. Rajan Pental and Mr. Ramesh Sai spoke about the two things they covered broadly. One is the financial discipline and one is the transparency. They spoke about the at broad level. So, I'll go one level down. I handle the underwriting piece in the bank. So, from the underwriter's perspective, what are the things probably are at the dealership level, what are the things which if you take care, those balance sheets become bankable. That will be my broad agenda to cover, right? So nothing right and nothing wrong, right? So whatever the balance sheets I see from the dealership and what is the experience we have, so I'll share that perspective, right? So broadly, I'll not cover the what is going good. So what are the improvement areas? I'll cover broadly that. 2-3 things. That first thing, that in the balance sheet level, the short-term, long-term mismatch is the biggest problem probably at dealer's level, because at your level, money has only one color, but at banker's level, the money has multiple colors for us, right? So, and when it comes to the appraisal, the short-term and long-term mismatches we see as a banker very seriously, right? So, I'll see that whatever you borrow for short-term, we use please the short-term. Do not divert those funds for the long-term. The moment those funds are diverted for the long-term, there is a mismatch in the entire balance sheet, and that operating cycle becomes the problem. So for example, if you borrow inventory finance for 60 days or 90 days, and you use that money for the creating either the used car assets, which are maybe there for 6 to 12 months there in the balance sheet, or you use for that the money is stuck up in the say OEM incentives, right? That is the long-term use, and that creates the entire problem, right? Similarly, so, and many times we see in the balance sheet that the inventory finance or the case credit or overdraft limits are used for the creating the fixed assets, either in form of the your workshop or the showroom or spare parts or other machine, right? That is the biggest challenge, that those balance sheets as a banker we find challenging as a to lend, right? There may not be any repayment issues, there may not be intention issues, but as somebody said that we are the regulated entity, we are subject to multiple audits, 4, 5, 6 audits. So for us, though we know that money will not be go away, but still we find those balance sheets difficult to lend. So first thing that there should not be long-term, short-term mismatch in the balance sheet. Whatever you borrow for the short-term, please use for the short-term. If you need money for the long-term purposes, please reach out to the bank for the funding for the long-term use. So there are term loans, there are working capital term loans available in the bank. There are products, right? Even by mistake, if you diverted some amount, immediately please reach out to bank. There are products in the bank where bank can reimburse those diversions and balance sheet can be corrected, right? So end of the day, when you prepare the balance sheet, the long-term and the short-term mismatch should not be there. That is the first and the foremost point you should take up. Second thing, that leverage, right? Everybody spoke about the leverage. In every business, there is a limit to income. You cannot increase your income beyond a point. If the commission is 4%, you can't increase to 5%, right? So how you increase your earning, how you increase the bottom line, that's a critical, right? So there are ways and means that in the every balance sheet, whatever the P&L you earn EBITDA, the gross margin earn, there has to be proportion to gross margin versus the interest payment. Every entire income cannot go in the interest payment, so that you are not left with any balance in the balance sheet or any profit in the balance sheet to sustain or to create the enough working capital margins. There are balance sheets which are leveraged to the brim, right? To the extent that after the payment of the interest or maybe the salary, there is nothing left in the balance sheets, right? Those are the second biggest problem, that there has to be some limit to leverage the balance sheet to borrow the limit, right? So then many times there are issues, the urge to borrow, that dealers go into the expansion mode without planning and without having the long-term funds or the proper funds, or maybe that your money is stuck up in the unproductive assets and the balances are leveraged. My request that you please analyze which are the assets which should be monetized, which should be liquidated, and money should be infused in the business, right? On the leveragement one, I'll say that when you draw the capital, you draw the salary, you draw the interest on the unsecured loans, please see that enough margins, working capital margins are left in the bank balance sheet, so that when you submit a balance sheet to bank, the bankers do not face any issue in the lending for the working capital projects, right? That is the second thing. Third thing, I'll say that your inventory levels, right? So many times, either the funds are available for a period which is beyond your operating cycle. So for example, you place an order, you receive the car, sell it and get the money. And there is a 30-day cycle. But you take inventory finance for 75 days or 90 days, there is a period when the money is available in hand, and that is the time when the temptation happens to divert the money, and that creates the problem. So please make sure that you do not have the mismatch in the operating cycle and the tenor of the finance available. Just because the bankers are ready to fund you beyond the operating cycle, you should not get tempted to get the finance beyond the desired level. That's my third request. Yes, sir.
Hello.
Oh, you
Yeah,
got
thank you. Thanks. Okay. Yeah, thank you, Mahavirji. But I'll just add one thing to it. We as dealers, we don't even know when the funds gets diverted. It gets diverted without even our knowledge or without even we understanding or knowing that it gets diverted. So we have Vikasji with us today. He's from HDFC. They are the biggest lenders as far as auto retail industry is concerned. So we'd like to understand from Vikasji, how do you think that a dealer should be managing his financial prudence, or probably what should be the right balance between borrowed and owned funds when you are doing auto business?
Thank you, Sai. And very good evening. I think it was very interesting session. The first session was really very nice, and I think most of the points were covered and very knowledgeable insights shared by everyone. Sai, I think what Mahavir mentioned about financial prudence. I think I echo that, and maybe add to what he was mentioning, that there is a need today in terms of what is your own capital, how much you need to borrow, and what is the short term, what is the long term borrowing you're doing, whether there is a mismatch happening or not. I think there is a genuine requirement of a professional CFO to have in the dealerships. I think everybody touched upon that now the way dealerships are becoming bigger and bigger, the geographies are expanding. It's a need to have a professional CFO to run this. And when you mentioned that we don't even know when these funds are getting diverted, and that's where I think my point is more pertinent, where we want to have somebody who can highlight, who's handled these finances for very long, and come back and tell the owners or promoters that this is where the areas which we need to improve. Coming to the mismatch, I think there are products available. There are long-term requirements. There are products like term loans and all that, where we need to the dealers want to expand, buy land, or something else. That's where I think those products need to be used. Short term needs to be only remain in short term borrowing. And the last point which I want to make is the transparency. Bankers love transparency. If there is a complete transparency in terms of what kind of inventory you have, what kind of sale you've done, and if that entire thing transparently is being shared by the banker, I think banker will be more than happy to extend higher limits, higher funding. So that's where I think we come from. And I think times have come where I think we need to be, every dealer need to be very financially prudent, and that is where the expansion Mr. Iyer spoke about, or the earlier speakers spoke about, that the industry is bound to grow to this thing, and without financial prudence, I don't think there is enough headway in that direction.
Rightly said, boss. Ajay ji, with your experience in auto industry, you've handled two-wheeler, commercial, four-wheeler, you've handled businesses within India, outside India. So what are your key takes? Because I remember it correctly, it was under your tenure in Hyundai, wherein you guys expanded from 75 to 500 dealers. And probably with the turnover of the cycle, you must have seen few of dealers, or good amount of dealers amongst those probably going bankrupt or closing down their shops. So what are your key takes as far as the running auto retail business is concerned from the OEM side?
Thank you very much. Good evening, everyone. धन्यवाद आपने सब बुलाया फायदा की तरफ से. Thank you very much. Fantastic. First of all, dealers को कोई business सिखा नहीं सकता. As OEs, we always learn. Nobody can. We are still learning business from our dealerships, but they are our first customers. But on the other side of the business, I think let me keep two things with my experience very simple. One side is your revenue. Every dealer understands the revenue, and one side is the cost. Today, the management between revenue and cost has become a real challenge for our dealerships. You know why? Because being an OE, I want the best facility. A dealer who is investing in a facility, he also wants to be seen best in the town. But the break even is longer for that. So there's a catch there. Second is your cost, where your interest cost, your manpower cost, and your rental cost has become a real problem. This is around 20% of your dealership turnover. This is my experience. And dealership who doesn't pay attention to these three cost factors had serious problems. Because on the revenue side, the vehicle sales is the most important thing, but the margins are coming down. Competition is huge. Second is after sales, against huge competition within same city, 4 dealerships, 5 workshops. Margins are coming down. A dealer who doesn't pay attention, very well said by one of our previous panelists, if you do not pay attention on your allied businesses, insurance, accessory sales, your penetration to the finance, rightly said by Ganesh, nobody is thinking about used car business finance in India. Used car business 10 years back used to be just half of new car, today is 1.2. And the finance is only 25%, rightly said by Ganesh. So dealers have to be very, very smart, paying attention to this. That will bring the financial prudence. That's my experiences. Number 2, again, very important point, the customers are more intelligent than us. Today, 72% leads in passenger car industries are the online leads. So he has a clear option. I will buy insurance from outside before I walk in. I'll buy finance from different banker in-house. So dealers have to invest the right kind of people. And I am fully with this that a good CFO rather than good CEO is the need for 5 years down the line for a dealership. That's what my take, and I would like to share this with my experience of 30 years with two-wheelers, commercials. That's going to be the future for our dealership. If they really pay attention, and if you do not pay attention on your secured and unsecured loans, you will be in trouble. Serious troubles. That's my takeaway. Thank you.
सर अभी आपने एक चीज़ बोली कि आई एम सॉरी आई एम आस्किंग यू अगेन अभी आपने एक चीज़ बोली कि यू हैव टू टेक केयर ऑफ योर इंफ्रास्ट्रक्चर कॉस्ट कि मैन्युफैक्चरर शोरूम बड़ा मांगता है, डीलर प्रॉबेबली चाहता है कि उसको सबसे बड़ा शोरूम मैं खोलूँ शहर के अंदर में, बट समवेयर डाउन द लाइन सर डोंट यू फील कि इट इज़ द OEM's रिस्पॉन्सिबिलिटी ऑल्सो टू, बिकॉज व्हेन अ डीलर इज ओपनिंग द शॉप, he probably has a different perspective of revenues, he has different perspective of margins, but from the OEM perspective, the OEM and the banker, these are the two probably main streams wherein they exactly know what would be the margins, what would be the return in the business, whether the dealer business itself would be profitable on day one itself. And especially post COVID, we've seen the requirement of infrastructure is probably no longer there. You rightly said that 75-80% of our customers are doing research online. It's only for test drives, for a touch and feel factor that they are visiting the dealerships. Going forward, do you think that we need to probably be seriously working on our infrastructure costs also? Because if you save something from your infrastructure, you can deploy that same capital in your working capital and you can probably reduce your lending. I'm sorry I'm saying that.
I fully echo what you're saying is correct. 5-year, 10-year down the line situation definitely would change. You will have lesser people interacting with the customers because customer had researched everything before coming to you. During COVID, me and Ganesh, we were working closely. And frankly speaking, we launched a program called contactless delivery. This worked fantastically for us. Everything was online, finance was offline. We had a demo online and delivery happened at the customer residence. And this worked very well. There are many OEs in India already working on these platforms. So this is going to be for the future, definitely. And infrastructure would play a lesser role, but workshop definitely no. You have to have a workshop for all the intakes, but definitely showrooms will have more interactive sessions, artificial intelligence, this will play. That's the reason I'm saying we have to invest more of a right kind of sales people in terms of training rather than infrastructure. And even OEs, I think, would start understanding this point of view. So investment is going to be more towards a different side of training rather than bigger creating Taj Mahals. This is what I feel.
So, yes sir.
So sir, on your point regarding the investment in the infrastructure, I'll add only one thing, that these are the financial decisions and commercial decisions, right? So, and this has to be taken with the mind, not the heart, right? So there can be demand, but there has to be financial viability. Whatever we do is ultimately commercial business, right? If there is no financial viability, may not be that every business will give the return in the first year, right? But on the day one, I should have the clarity, okay, at least 24 months now, this business will be my break-even. And third year onwards, I'll make money. But we should know upfront. We can't keep on investing money without knowing that whether I'll make money second year, third year, fourth year. I must know the day one that this is my financial viability in this business. That's, I think, probably my experience that point is missing. That in hub probably we take the emotional decision, people take the emotional decision, they invest the money. That is the critical point. As a banker, I'll say that we must be careful while investing every penny.
I totally agree. It has ultimately the responsibility is on the dealership. So you're absolutely right in that. So we have Eric with us. Eric is heading the two-wheeler division for Bajaj Electric. Bajaj. The electric vehicle business of Bajaj. So two-wheeler business itself is going through a sea change. We see 50% drop in two-wheeler sales. So from the general two-wheeler dealers, the traditional ICE dealers, if I would like to ask you that what should be the take of the current two-wheeler dealers? What exactly they would be doing? Should they be going aggressive in the market to recapture the numbers which probably they were doing somewhere in 2018, 2019, or probably they should downsize their business, change with time, downsize their infrastructure? So what is your take in that?
Thank you, Sai, and good evening, folks. Very difficult question to answer because I'm also a Bajaj Auto employee and we make lots of internal combustion engines. Let me just take a step back and talk about three transformations which are happening in the market, and then I'll try to draw a very broad conclusion, if I may. So I think the three big transformations which are happening in the two-wheeler marketplace as we look around is, the first is from the consumer. Traditionally, the retailer controlled what the consumer saw, what the consumer experienced, and what the consumer could access. That has shifted to the consumer now controlling that entire process. Partly this is due to Google, partly it's due to OEMs having better websites, partly it is due to third-party aggregator websites. There are many reasons for that, but this is a very fundamental transformation. Sitting behind this transformation is the fact, which has been mentioned by previous speakers in the earlier session, that you can get retail finance online, you can buy insurance online, you can find out your own CIBIL score and figure out who will give you a loan and not give you a loan. So this is transformation one from the consumer. The second transformation which is happening is, in your traditional construct of a dealership, the dealer owned all the data with respect to the consumer. Okay, actually the OE never got to know anything. Financiers got to know a little bit about who they finance. The insurance guys probably never got correct data to start with. Yeah, this is also changing. Because of a digital infrastructure, you're going to see data being shared increasingly with OEMs and with your other business partners like financiers, retail financiers, and insurance service providers. This will get further deepened and strengthened as more and more electronic governance, as put by regulators, comes into effect. It will get even stronger once connected vehicles kick in a larger way, where the OE will get significantly greater data than any dealership can ever hope to get. The third big change which is happening is with the advent of environmental change, some of which I've spoken about, and with a change in technology such as electric vehicles, I think there is genuine, there's a genuine possibility of a change in the business model. And the reason I'm raising this is because electric vehicles create a certain dynamic. To begin with, the amount of service, not in terms of frequency, but in terms of work content, comes down very, very dramatically. There's an old argument, there are very few moving parts and therefore it doesn't require service. The good news is it does require service. After X number of kilometers, it has to come back to you. But where you would have probably changed lube and done 30 activities on an internal combustion engine vehicle, you will just do 3 activities on an electric vehicle and it will go out again. So your work content and therefore your earning comes down dramatically in the workshop. The second point that will happen is you will need to invest in greater expertise of people. Again, this is a function of the technology that electric vehicles is going to bring to the table. It's a new technology. Many of us in this room are familiar with mechanical devices. Most of us have used electronic devices, but we don't understand how it works. Guess what? Now you have to understand how it works. You have to fix it. You have to maintain it. You have to run it. This expertise is not going to be cheap. It's going to be expensive. You have to retain that manpower. Very, very difficult to do. Something we need to think about very deeply and how to do it. And it's going to force you to change your business model. And the third thing is, with all the customer being in charge of the journey, your opportunity to cross-sell is going to be very, very limited. Everybody talks about cross-sell. It is the most difficult thing to do. Yeah, the guys who are really going to do that are the platform guys like Tata Neo and Jio, something else which is going to come up on your mobile phone. So cross-sell as a strategy, I think, is a very, very questionable strategy going ahead for any dealership. So given this environmental scenario that I have painted, let me try to just talk about the implications in terms of viability and finance. I think there are some very clear implications that come. I don't have the answers, but I can just point out the implications. The answers you have to come up with. I think the first implication is very clearly, if your model was dependent on workshop absorption being a really large percentage of your earnings and therefore viability, that strategy needs to change fundamentally. You have to earn money selling the product, not servicing the product. How you do that successfully? Well, there are well-known strategies. You sell more. Maybe you have a larger area of franchise compared to what you had earlier. So I think that is one very clear direction which will come. I think that also comes from the fact that you have disintermediation. If you can't cross-sell, you can't capture more value from the customer beyond a point, because there are more powerful parties sitting out there to capture the value, you would need to pivot your strategy accordingly. The second point is, how will the shift happen between ICE and electric? Well, the good news is, the government of India is giving subsidy only till March 2024. Okay, it's a huge subsidy. So when that huge subsidy vanishes, how many electric vehicle consumers will still be around to buy electric vehicles? Big question mark. There will be some. I'm very confident that you are going to see a significant shift in some parts to electric vehicles. But I don't think under any scenario we are looking at a 100% shift to electric vehicles. I think if there's one thing the Ukraine conflict has shown us, it is that carbon-based energy is here to stay for quite some time. Yeah, Europe is running around despite all their grand statements. They don't know what to do without Russian gas. Yeah. So I think you're in a very, very strong position because you can play both games. Yeah. You can continue and harvest your internal combustion engine vehicle business, and you can look at building an electric vehicle business.
Thank you. So Eric, while we are discussing about electric vehicles, so one thing, it's not related to finance, by the way. So one thing which probably everyone sitting in this room would like to know is there are few electric vehicle companies, OEMs, who's taken the direct route of selling their vehicles to customers, bypassing the dealers. So what is your take for that, and especially in the Indian market wherein every 50 kilometers or 100 kilometers the language changes, the dynamics are such, the connectivity, internet. So what's your take on that?
That's one OEM has certainly done that, and it's not as easy as it looks. Just to give you an example which may set the context and allow you to think a little bit about it. Amazon and Flipkart are quite old in this country. And if you look at the data in terms of number of mobile phones which are sold through Amazon and Flipkart and other such channels versus what are sold through physical stores, you will find, surprisingly to me, what I discovered is 50% of the mobile phones in this country are still sold through a physical channel. So that tells you something, if something as simple as a mobile phone could not get 100% disrupted, it is very unlikely that the automobile business is going to get disrupted by direct to consumer. Certainly a segment of that industry will get disrupted. I know Mercedes, for example, has gone direct to consumer, keeping the dealer in the loop in certain areas. others will also try to do that. And that's what I mean by the dynamic changing between an OEM and a dealership. But I honestly think that in a category like two-wheelers, I think the sheer transaction intensity requires people on the ground. And it's very difficult to do for an OEM, any OEM, across this very, very large and varied country.
You're absolutely right, and even the one OEM who has gone that way, the kind of challenges that they're facing and the reviews that they're getting, it's quite amazing. Ganesh, I'd like to ask one thing from you is, as you said that, see, you're neither a borrower nor you are a lender as far as finance is concerned, but you play that bridging gap for the dealers as far as you've one step wherein you try to maximize the revenues for the dealers. This is what you said in your keynote. But I'd like to understand, see, there would be many platforms, online platforms, and as Ajay Boss ne abhi bola, Ajay Boss said ki there would be customers who would probably go 70% online. So even before the customer comes to our showroom, he would probably go online, he would search for even finance, the availability of finance. Don't you think it's going to hinder our in-house business, and how probably you think that your platform, or probably how the dealership needs to evolve around this? Because we are still in a frame of mind wherein we take the physical documents when the customer comes in and then do the finance process.
Yeah. So there is two concepts. One is point of sale, where your physical car is available, customer walks into a dealership, he selects a car, he submits document, and finance happens. Now, as Ajay was saying, it is moved to point of search. They all come online. And recent research across all matured markets, whereas in US, 90% of the customers believe they will buy vehicles online if it is through a OEM website or a OEM sponsored dealer website. So it is, even though the point of sale exists, the customer walks into a dealership. Now the momentum has started slowly shifting. So it will reach India also very soon. It's the point of search. A customer comes online. If you have a website, it's like your dealership. He comes there, selects a car. If he comes to OEM site, he selects a car, then he selects the dealer with whom he wants to take the car. He validates himself, submits his documentation online, very few things required. Then he gets his finance, insurance done, he comes to your dealership for delivery. So we have to move on. Dealers have to embrace technology and have their stocks listed in their own websites. You should have a website, or the OEM should ensure that all the dealers are available in the available online.
Yeah, thank you. So since we started late, I think I'm getting feelers for time being up, time being well. We'll just continue for next 5 minutes. Request. Thank you. So Ajay was just like to understand one thing from you, from the OEM perspective and from the dealer side. See, whatever money we make while we're selling vehicles, that's one part of it. But we got equal opportunity to make probably the same kind of money or more money in the given scenario, whether we're doing it for finance, we're doing it for accessories, we're doing it for insurance. But nowadays what we have seen is that the government agencies, IRDA says that in your dealership you have to write that customer is free to choose from any insurance company. Finance, you can't force finance on customers. So in the given scenario or the given changes, how do you think a dealer should probably work to maximize their revenues from these streams? And what would be the role of OEM in handholding the dealers?
I think OEM role is going to be very limited. You also have to be very cautious going forward regarding 2 points. Today it's completely time of social media, right? And 15 years back, 20 years back, we used to get letters from customers in writing, or maybe mails were just being evolved. Today, any vent of happiness or frustration is online within seconds by a customer. Whether it's a point of search, even rightly said, point of search also, if I see a website, I'm not happy, I will write something on my Twitter, etc. It's worldwide, global. So nowadays, very sensitive. Even dealers will have to be very cautious on transparency. That's the key. Today, anything not mentioned as per the OE, for example, price list, charged something wrongly by the dealership is publicized, is heard. And this hurt goes to damage the complete image of the dealership and complete brand image of the business. So while you are talking about OE has a very little role to play, we will give coachings, we will give all trainings, but the dealership teams have to play a very critical role in that going forward. Right kind of communication, transparent communication. Do not think by mistake some overcharging happens is going to be boomeranging against it. So we have to invest in people. We have to invest in the mindsets going forward, and also technological mindsets. When the technology is changing, transparency is changing, you have to also adapt according to your team should also be adaptive. Because as I said, this is social media, and social media nowadays is like 10 seconds, the expressions are felt globally. So these are my takes, that you have to invest in right kind of people, and transparency is going to be the key going forward in your business. Yeah.
So, Vikas, just last one question from you. How do you think your bank, HDFC, which is probably number one in retail finance, could help dealers maximize in-house finance? And let me tell you frankly why I'm asking this question from you is because as on day, the maximum challenge that we face for in-house finance is from HDFC retail banking only.
Yeah, I think, yeah, this is an interesting question. This is what, when we talk to dealers, I mean, this is one of the things which is always, it comes up. So my answer to that, a specific answer to that is catch them early. So, so why I'm saying this, because, somebody was mentioning that 90% customer, the buying journey starts online, right, for 90% customers. So, but post that, the second point, according to us, is they start coming to dealerships to start looking at the vehicles. And that is where I think dealerships need to be more agile, executives need to be more, aggressive in terms of figuring it out. We have recently, I don't know if you are aware, rolled out Express Car Loan, which basically is a journey which you can actually lock in a customer the minute he walks in. You talk to the customer checks his eligibility, bases eligibility, the entire turnaround of the loan right from application to disbursement can be done in 30 minutes. So this is absolutely fantastic product. So once a customer comes into a dealership, lock him in, and that's where he's yours. He's clearly yours, and then he doesn't even go out. And it's not only the bank, there are multiple other channels which talk to the customer, and he has multiple options. So when he comes here, you lock him in and he's yours. So that's I feel those kind of, and that's where the digital mindset everybody talking about, we need to get there. The second part, I think, let me just half a second more on that. So what happens, the efficiency of your executive also enhances here, because if that customer is down and dusted with, you have, which was earlier taking maybe 2 days, 3 days, he can, concentrate on the next customer, and the productivity and efficiency which we are talking about also increases. So, both ways your revenues can keep moving up. Thank you.
Thank you. And with the current Vahan and the registration process, I guess, if a customer comes for inquiry and we can approve the loan then and there, sanction it, disperse it, probably the customer can go away with his car from the dealership. So, do we have time for some Q&As? Yeah, please. So, any questions you want to throw to this panel, please? Anyone? You can raise your hand. We'll get the mic to you. Oh, so probably Saharsh and Vignesh is saying that we're over with time, so they'll ensure that no one raises their hand. But one thing is clear, that it's our money. It's our business. We need to take care of our business. Definitely, our financiers, bankers, and OEMs are there for handholding with us. And probably they know before us if there is any diversion of fund or any shortfall of funds. We need to work together to probably run a more profitable business. So thanks a lot. I think it's a very good session, good takeaways. Thank you.
Thank you. Thank you so much, gentlemen. I'd like you to just stay where you are. We'd like to felicitate all our speakers on the dais. May I request Mr. Mukesh Kalmari to please join us on stage to present our token of appreciation. Mr. Mukesh Kalmari would present to Mr. Ganesh Kumar. May I also request Mr. Man Singh Pawar to join us on stage, please. Mr. Man Singh Pawar. He'll be presenting the memento to Mr. Mahavir Agarwal. May I also request Mr. Devin Bhandari to join us on stage, please. Mr. Devin Bhandari joining us on stage. We'll be presenting our token of appreciation to Mr. Eric Wass. May I also request Mr. Ashal Gandhi to join us on stage, please. So one more picture, please. We didn't get that right. Thank you so much. Mr. Achal Gandhi, join us on stage, please. He'll be presenting our token of appreciation to Mr. Ajay Raghuvanshi. May I also request Mr. Gautam Modi to join us on stage. We'll be presenting the memento to Mr. Vikas Pandey. Thank you so much. May I request all our dignitaries to just step forward for a group photograph before you all step down the dais. Thank you so much.